So I will call the meeting to order for our meeting today, February 26th. And this is the Management Committee Met Council. Welcome. And we will just jump right in. We have our agenda. We've all gotten this in advance. It's been posted for the public. Are there any edits or changes or additions to the agenda? Seeing none, then without objection, the agenda is approved. And then we do have the draft meeting minutes from February 12th, our Management Committee meeting. Everybody again has had a chance to review those. Are there any edits or changes to the draft minutes from our last Management Committee meeting? All right, seeing none, then I'd entertain a motion to approve those minutes.
So
Moved by Osman, seconded by Lee. Any further discussion? Seeing none, all those in favor say aye.
Aye.
And those opposed, no. And that passes unanimously. We'll now move on to our non-consent business items. We have two items on today's agenda, and the first one is 2024-70, and this is background check services, and it's contract 19P244, and we have our Chief Human Relations Officer, Cassandra Tabor, with us. And Joyce is with us too, and it's Masar, I believe, I'm hoping I'm saying that correctly, our Senior HR Manager and our Talent Management team. So welcome to both of you, thanks for being here today. And I'll turn the floor over to you.
Thank you, Madam Chair, committee members. As you mentioned, this is Joyce Masar. She's been with the council for almost 26 years.
Oh
This
my
is her
gosh.
first time presenting at the management committee.
Well, goodness
So-
sakes, thanks for joining us today.
Yes, as you mentioned, she leads our talent management unit of our department and is here to chat with us about some background check services increases that we need. So I will turn that over to her.
Great, thank you again for being here, and thank you for all your years of service. You've seen a lot of change in that time.
Yes,
I'm
thank
sure
you, Madam
so.
Chair, and
Thank
members
you.
of the committee. I'm here to talk about the business, our background check services. So in June of 2021, we entered into a 5-year contract with Employer's Choice to do our background services. And the initial contract was for $410,000. And then we added additional money, which brought it up to $500,000. Since 2023, however, we have the requests that we have initiated, the background checks have increased the number that we are doing. For example, the total number of vacancies we filled in 2022 was 423, and 2024 it was 933. So that's a 120% increase in the number of vacancies filled. And then we have the amount that we paid has increased from 71,000, well, we'll say 72,000 in 2022 to almost 211,000 in 2024. And that's a 193% increase in the cost to do the background checks. Why the cost has increased is the number of hires that we've been doing. And also, the Employer's Choice, the vendor, additional costs has been added to them to get the information we need. State and local governments, background DMVs are asking for more money to access that information. Employers are using the work number to verify employment, and that work number keeps each employer we verify, that's a fee, and if they use it for 3 employers, their fee's 3 times that, so it just adds up.
of course.
Wow.
Well, that's how it worked.
We've also been hiring multiple incumbent positions that we did not anticipate when the contract was initiated back in 2021. For example, train operators, we've been hiring those. We are now hiring them from what we say off the street, people that are not currently employed with us, and now we have to do a background check. Before they were current employees, so we didn't have to do that. Trip agents, we now have trip agents, and that was another one that we didn't know about, and that's the background checks that we're having to do for them. And then also for apprenticeship programs, those have been increasing, and then we have background checks for those, and we didn't know we'd be having all these apprenticeship programs. And we're hoping to continue and expand those apprenticeship programs. So it's just with all these additional hirings, and then we hired some additional talent acquisition specialists to help fill the vacancies, since we have so much growth happening at the council. And then they were hiring individuals, so we had more hires starting. So it was just all this compounding, hiring and background checks, we went through the money.
Yeah.
Went through the money.
And then I would just add to this, as Joyce mentioned, we've really been focused in human resources on our increasing our effective and our efficiency with recruiting. And so with that being said, this need that we're bringing to you is an immediate need. As we move into the future, we will do a better job of tracking how quickly we're moving through those dollars. Again, as she mentioned, we just did not realize that the change that had happened, we were so focused on meeting the needs specifically of transit that we missed that opportunity. So in the future, we will bring that to you earlier than we are today. We are anticipating, to the best of our ability, that this will cover us through the end of the year. The one thing that could have the most impact there would be attrition, typically with our bus operators. With that being said, we are seeing our attrition really start to level off, yes, which is huge. It's been a big accomplishment as we look at our operators. But I would say if I were to anticipate something being an impact, that would be it. And then as we're wrapping up 5 years in this contract and our costs continue to increase, we'll be doing an RFP. And then we also will be looking to see where we can leverage the state contract to the best of our ability as we move into that RFP phase. So though this is an urgent need, we do have a longer term plan and we'll have a better ability to predict these numbers as we're moving forward.
Great, thank you for that.
Yeah,
Councilmember Miller.
thanks. And just this is good news, I think, all around that we're filling spot. And then just to your last point there, and I realize you'll have more data and be able to figure out what we need through 2024. So then does this just become sort of baseline 2025 budget based on what we've learned this year? Okay.
Correct.
Yes.
Yes, and then we are currently moving through the budget process right now. And as we're seeing our numbers come in from the divisions that we support, we're hoping to be able to better predict as we move into the RFP process for future years what our growth trends are going to be, so that we can be more accurate on the front end with this.
Great, good questions, thank you.
Thanks.
Councilmember Cedarburg.
Thank you, Madam Chair. I think this is really good because it'll set a baseline for the next 5-year contract. And so if you're looking at 2024, 211,000 and you're 990 people, you're talking $215, $220 per person for background check. So then you have that data to say what should the next contract be and how can you leverage and just drop that down per unit check would be a great way of looking at things as well to evaluate.
Yes.
Great. Any other questions? Councilmember Lee.
Yeah, thanks, Madam Chair. Just a comment, I appreciate the urgency of this amendment, but this is a good problem to have because we are growing our workforce and as the goal line comes online this next month and as other lines can become live, that it's a good time to really project and think ahead and prepare for the next RP. So thank you.
Yes.
I very much appreciate that comment, and I would give a kudos to Joyce and her team, which over half of them are less than a year tenure. Our goal for bus operators in 2024 was 400. We left the year at 484. They're doing a really good job of making sure that we're ready for the work that's coming. So kudos to her team on this.
Sure. Thank you. Any other questions, comments? Yeah, and I would just echo what everyone has said. And again, thank you for your hard work. And again, this was the kind of stuff that in my head I was hand wringing about 3 years ago because just the layers that you need to get people in place and then to retain them. And you know, hats off. I'll look at Chair Barber here. The fact that we've got operators that are coming on and we're gaining, we're not losing, we're still gaining, and the retention hopefully will continue to go up. So we appreciate that. And I'm just really impressed how you ramped this up so quickly. I can't even imagine what it's been like in the last 2 years and that you're still with us, so thank you for that. But it's just super important. Again, it's just kind of those invisible things that you don't necessarily think about when you think about hiring. And the only other quick question I have is, does this all then get parsed out to the divisions for the background checks that they have, or do we keep this in administration for just an overall? I'm just budgeting, I wonder where that shows up at, which I probably should know, but I don't.
We do break it out, we assign it by each division right
Okay.
there to have an idea, but transit is the largest portion
Yeah.
of the background checks.
Yeah. Okay, I thought so, thank you. All right then, anything else? All right, seeing none, then we do have the proposed action that the Metropolitan Council authorize the regional administrator to execute an amendment for contract 19P244 with Employer's Choice that will add $450,000 for a total contract value not to exceed an amount of $950,000. And again, this runs through April 30th, 2026, which is part of our 5-year contract. Is there a motion to approve?
So moved.
Moved by Lilligren, is there a second?
Second.
Seconded by Pacheco. Any further discussion? Seeing none, all those in favor say aye.
Aye.
Those opposed, no, and that passes unanimously. So great work, please share with the team,
Thank you.
especially all those new folks, that we appreciate them coming on board to be part of this process too, and thank you for all of your leadership on this.
Thank you.
All right, now we will move on to item 2025, 6B, or I'm sorry, 6-8, glasses. Award transit wastewater and park bonds within established financial parameters. And we've got a lot of resolutions on this, and we're bringing up Mark Thompson, our Director of Treasury. So welcome, Mark. We're really glad to have you at the front of the agenda this time. We sure want to make sure to get to all your items on this agenda.
Thank you, Madam Chair.
Yes, so thank you for being with us.
So yeah, my name's Mark Thompson, I'm the Treasury Director, and I won't make it to 26 years. You don't want me to make it 26 years, I'd be very old. But yes, I'm here to present business item 2025-68, titled Award Transit, Wastewater, and Park Bonds Within Established Financial Parameters, Resolutions 2025-4, -5, and -6. The council is preparing to competitively sell tax-exempt general obligation bonds to finance approximately 12 to 15 months of projected capital expenditures for each of its divisions, transit, wastewater, and parks. And this is a bond financing that is typical for us each spring. The business item requests approval of 3 resolutions, as you mentioned, each which will authorize the sale, award, and issuance to the lowest bidder of a bond series for each division. Provided the sale results are within specific financial parameters. The parameters are determined in consultation with our municipal advisor and our bond counsel. 3 parameters in each resolution put a time limit on the sale of the bonds, set maximum issuance amounts, and set maximum interest rates. The bonds cannot be sold outside of these parameters. Common to all of them is that the bonds must be sold within 90 days, and our planned sale date is April 1st. The maximum issuance amounts reflect the amount of capital funding that each division is projecting to need over the next 12 months, as I mentioned, and the maximum interest rates are set according to market rates right now for similar AAA rated GO bonds with an added cushion. Market interest rates have been very volatile lately, which you'll see in my next presentation so we put about a point to a point and a quarter flexibility in the interest rates. Specifically, Resolution 2025 authorizes up to $81 million of 10-year GO transit bonds at a maximum interest rate of 5.25%. We're expecting the rate based on our projections. Our municipal advisor helps us run a mock bond issue and at current market rates, and they're predicting a 3.76, and transit bonds are repaid by levy. Resolution 2025-5 authorizes up to $76 million of 20-year GO wastewater revenue bonds at a maximum interest rate of 5.5%. We're expecting a 4.28 according to the projections. Wastewater bonds are expected to be repaid from wastewater system revenues. And Resolution 2025-6 authorizes up to $10.4 million of 5-year GO park bonds at a maximum interest rate of 5%. And we're expecting a 3.64, and park bonds are repaid by levy. So these bond financings support the Thrive Lens outcome of stewardship, as GO bonds are an efficient and low cost funding source for the capital projects. And so the proposed action is that the Metropolitan Council adopt resolutions 2025-4, 2025-5, and 2025-6 which authorize the sale, issuance, and award of general obligation debt within established financial parameters, the incurrence of related issuance expenses, and the execution of the documents necessary to secure the financings. And that ends my comments. Happy to answer any questions.
Thank you. Are there any questions, comments on any of this? We've been here before and done this before, so, all
Lower
right.
interest rates though, right?
Yeah,
Lower,
they have been
like
lower.
way lower.
And yet I am old enough to say that these are still good interest
Oh,
rates.
they're good, right.
But you know what
Oh,
I
yes,
mean?
yes.
Like, it's still a shock for
For a while,
everybody
it was
who's
like cash
normal.
over time.
Right, like some, I know some are getting like 2%.
I'm sure I can give you a little background on that too.
You have time if you want, we owe it to you.
So, last year we only sold wastewater bonds and they came in at 352. So now we're expecting a 428, so 0.75% higher, but still good rates generally. Transit, we didn't issue last year, but we issued in 23 at 264. Really good rate.
Yeah,
We're expecting a 376. And park bonds, we issued in 23, so it's been a while. Rates have changed since then. 278, now we're looking at a 364.
Yeah.
So,
yeah, still good money,
Oh, yeah.
good money.
yeah, our outstanding bonds are all,
Yeah.
you know, we've issued in the last 10 years, 10 to 15 years in a row. Really good.
Plenty of us have been around when rates were high and then you refund and you refinance and you do things too when they start to drop, so.
Right.
Anyway, so seeing no questions, we've got the 3 resolutions. Mark has read the proposed action, but I'll just reread it again, that the Metropolitan Council adopt resolutions 2025-4-5-6, which authorize the issuance, sale, and award of general obligation bond debt within established financial parameters, the incurrence of related issuance expenses, sorry about that, and the execution of the documents necessary to secure the financings. So, is there a motion to approve staff's recommendation?
So moved.
Moved by Osman, is there a second?
Second.
Seconded by Tide Cedarburg Lee. It's his last meeting, so we're gonna make sure. It's in the minutes. All right, is there any other discussion? Seeing none, then all those in favor say aye.
Aye.
Those opposed, no, and that passes unanimously. So thank you very much for your hard work on this. We do appreciate it. Moving on then to the information portion of our agenda. Mark will stay with us and we're bringing back an item that we didn't get to at our last meeting, which is the Quarterly Investment Review Advisory Committee Report. So I'll turn it over to you again. Thank you.
Thank you, Madam Chair. Yes, this information is from is a summary of what was discussed at the Investment Review Advisory Committee early in February 11th we met. Going over, I'll give you some economic information and talk about each of our 3 portfolios. It's a total of about 8 slides, so it doesn't take too long. But, it was a wild quarter, as you can imagine, with the election and the Fed was cutting interest rates, and saw a large shift in inflation expectations, and we also saw a large shift in interest rates. So it was a lot going on, and I'll show you details on all that. Growth was really strong. Inflation ticked higher, which caused the Fed to pause their cuts, and we'll go over that. The labor market was really volatile, so I guess I'm in control here. Thank you.
Is there anyone in the back room that can advance the slide for us?
Oh, there it goes.
Oh, got it, okay, good.
So a little bit about growth. This chart shows the GDP for the last 6 quarters or so. You can see the 4th quarter was mostly strong. It came in at 2.3%. The economy grew, which was down from 3.1 in the 3rd, but still a decent rate, below expectations of about 2.6. 4th quarter growth reflected strong consumer and government spending, partly offset by a decrease in capital investment. GDP for the whole year was 280, which was very comparable to 2023's rate of 290. And for context, during the expansion of 2009 2010 to 2019, we averaged 2.4%. So still strong growth, resilient growth. A little bit about inflation. You know, this is obviously a big topic right now, and this is a graph of the CPI, the Consumer Price Index, which is a common inflation index. You can see it's been plateaued for quite a while, really through most of '24. You know, hovering around that 3% level, which is, you know, still above the Fed's goal of 2%. We started the year at 3.1, we finished at 2.9, so not a lot of meaningful change overall for the year. It ticked up in the fourth quarter. You can see on the far right side of the graph that it increased late in the fourth quarter. And since this chart came out, we also got January's data on the CPI, which came in at 3%. So it continued to spike up in the fourth quarter and in January. One of the reasons the Fed paused its interest rate cuts that they started in September, but I'll kind of go over that in a minute. A little bit about what the growth was, you know, oops, that's the wrong slide. Here, I wanted to give you a little bit more information about the CPI. We really saw throughout most of the year where the inflation was coming from was in the category called core services, which includes housing and rent, and it includes what you think of as services, personal services, medical services. That's predominantly where the price increases were. Food was a distant second. Labor market, really hard to decipher the labor market recently. If you look at the left non-farm payrolls chart, that measures jobs added to the economy each month. And you can see how volatile the blue bars are. In the fourth quarter, you know, November and December were very strong. October was really weak. And looking at the whole year, the summer was much lower and was volatile also. So it's a little hard to decipher what that might mean. December payrolls, again, after this chart was produced, December was revised higher to 307 jobs, which is really strong. But then January came out at 143,000 jobs, so it really dropped. So it's still up and down, and another reason the Fed paused as they wait for more data on the labor market.
And Mark, if I could just ask, and this is, you know, I don't know question, so it's probably dumb, but and is it adjusted in December then for like holiday spending or anything like that every year, or is that just?
Yeah, these are revised.
Okay.
So they come out with an initial one and they revise it 2 more times.
Okay.
In the following months, so it gets that.
Okay. Right.
But that was another surprising thing is January was revised, came out so low. Usually that grabs a lot of the holiday numbers. So.
Yeah. Okay. Thank you.
I guess I'll touch on the upper right. You can see the unemployment rate, which over the course of the year was going up. First half of the year was rising, and then it's kind of leveled off a little over 4%. Second half of the year, doesn't seem to be a lot of concern about that. I mean, I think most economists are looking at the labor market as pretty healthy as long as we're around that 4% level. The Fed is a little more concerned about it. So again, Fed's waiting for a lot more data on inflation and labor before they. And of course, there's a lot more economic uncertainty going on right now too. So.
And Councilmember Barber has a question.
Oh.
Yeah, so
Yes.
obviously a big chunk of non-farm payrolls is government, and obviously there's a huge amount of volatility in the federal level. How long would it be before we see all of the, and we know those job losses are not just in one area, they're all over the country. So like, when will those be reflected in data we see?
Oh boy. So it could be, you know, this comes out every month, so it's gonna be continually updated. I think, you know, if you're talking about the firings or laying off of federal workers, that's been happening. I don't wanna get political, and I don't wanna get,
It's just, it's
Give my
just data,
opinion,
it's
but-
just data.
but the data is 97,000, I think is the number I read this morning of firings so far. And that's 0.1% of our overall labor force, so it's a small amount. Not dismissing that we should care about those people, but I don't expect it to have a huge impact on the overall employment rate
Yet.
yet. Who knows where we're gonna go in the future on this, on the whole thing, right? So, but you could see in February's numbers, I would think, in March, that we're not adding jobs, it's gonna come way down. That's yet to be seen.
And that's a really good point, Councilmember Barber, and I don't know if everybody gets this kind of information anywhere else, I do not. But I don't know, Mark, maybe if you would just send us like this kind of a chart in between your presentations so that, you know, we could just
Oh, sure.
kind of stay updated as in real time with what's going on in the private market, what's going on in, you know, the public space. And then always the trickle down effects that when people lose their jobs and people are afraid and tariffs and all of it, what it does to the economy, so. Maybe if, you know, just be an information email that comes, but I think it'd be kind of interesting to chart, you know, month over month. Thank you.
Sure, Madam Chair, I can do that. I've got tons of data that can show dive into each bar and what makes it up in detail, so I can share that. It's so strange for me to have so much time.
We just bask in it, just bask in it, yeah. It's making up for all those other times we hurried you.
I'm surprised to see only 8 slides.
Yeah,
We gotta take it away some from next time though.
So thank you. This is the treasury slide, which I show every time too. It's showing, to me, this is a very interesting slide, maybe not to everybody, but on the left is the Fed meetings from 2024. And I don't know how much people follow this, but I'm kind of a nerd on it, I guess. But so they meet 8 times a year or so, and you probably all know they started cutting rates in September by 50 basis points. That's their target rate range on the right. And they cut again in November and again in December, and they paused in January. So interesting, and I'll kind of relate that to what we're seeing in our portfolios. So like I said, it was a wild quarter with the election and the Fed cutting rates. You know, we saw a huge shift in inflation expectations and a huge change in the yields, as you can see on the right chart. The solid blue line, I guess, is the end of the year. The dotted one is where we started the quarter. So this is how rates changed over the quarter. And you know, the far left side of the chart shows how rates dropped from over 5% down to you know, just over what, 4 1/4. I can't read it from here, but I think it was about 4 1/4 where they ended up, and you know, that's directly comes from the Fed cutting rates, and it affects our short-term portfolio immediately because that's a high turnover, very short-term portfolio, and I'll show you that result in a minute. And to flip the page, the longer or not, just to look at the longer side of the curve to the right, you can see that rates rose dramatically for intermediate and longer term rates. And so the entire interest rate scenario kind of flipped, and the shape of this, you know, this is called the yield curve, completely changed. So, you know, yes, on the longer term rates went up, which will give us opportunity in our long-term portfolio. But we're losing a lot of return in our short-term portfolio, and I'll show you a little bit more on that too. So pre-election, most of the markets were thinking about, the Fed's decreasing rates, inflation's coming down. The Fed thought inflation was gonna get down to their goal. You know, that was coming into the fourth quarter back in, you know, September, October. People were expecting 5 more cuts in 2025. Well, after the election, post-election, that completely flipped, right? So The markets rallied pretty hard right away, thinking that, you know, the new administration was gonna be pro-business and deregulation, and it was gonna be high growth. Then that later flipped in December, January, when people started thinking about, whoa, inflation's gonna pick back up, and we saw, you know, based on policy and based on inflation data we saw in November, December, and January, was coming back up. So the markets have since flipped again, and that the new fears of inflation caused the long end to spike up in yield like you see there. So another reason the Fed said we're gonna pause. If inflation's gonna increase again, we're gonna keep rates where they are. So
And
now we're expecting 1 or 0 rates, or 1 to 2 rates in 25 for cuts.
And just a quick question, so again, not political, but with, you know, tariffs on and coming, and more coming our way, with businesses, you know, trying to maybe spend up their Biden money, but pump the brakes too on new spending and expansions, or creating new jobs and companies, corporations, manufacturing, whatever, like, you know, this has to be putting a chill then on inflation, right? Or certainly investment, unless reshoring and bringing jobs back. I know I've heard, I'm just, you know, what do you think we've got like in the next month or two ahead of us, just as, you know, we've got tariffs coming on, which impacts everybody's spending, right? So ours included.
Yes, are you asking, Madam Chair, what I think the
Yes.
results of the tariffs will be?
Yeah.
And-
Or just generally kind of where we're going right now in this economy
Yeah.
and the uncertainty, and, you know, we're in all of this, so.
And you saw in the stock market the last 2 weeks.
Yeah.
The markets are scared, right? They don't know, and none of us do, when, where, the extent, how long the tariffs could be in place, right? So, and I think this is just kind of trying to stay in the economic lane, right? Tariffs can cause inflation, right? Costs can be passed on to the consumer, but not necessarily either. You know, it can be absorbed in a supply chain. You know, I think a lot of countries around the world are very dependent on the American consumer to sell things. I read that I think 80% of Mexico's exports are coming to the United States. Well, we kind of control, we're kind of in charge there. Things like that happen too, where it may not lead to inflation. So it really depends on the product, the country. Some countries may, you know, bow down to our demands and some won't, right? And some resist. So it's really hard to say. I'm not of the opinion that we're gonna have this widespread, huge spike in inflation myself. That's just me. I think some manufacturers that are importing things might find different supply chains too. You know, if this country's super expensive, they'll look for another one, or they'll look for an American producer, or I don't know, there's a lot of reasons it could cause inflation too. I'm not saying it won't. It certainly can, and it might. But there's ways it could be offset too.
Yeah.
You know, you American consumers are pretty powerful. You know, you go to Home Depot to buy a hammer, and now I'm going way off on tangents, but
And Councilmember Barbara has a question too.
Keep it.
Yeah, no, I just wanna make sure.
You go to Home Depot to buy a hammer, and one weekend they're all $20, and the next weekend the one from Country X is $30. Well, you're probably gonna go buy the American one at 20, or the country from a country that is not tariff. You know, I mean, we have power to buy other things, or to
Or not
stop,
buying.
Correct,
right, or stop
we're just
buying.
showing up in some retailers' numbers.
I go to Covenant and buy coffee, and it used to be $8 for a tub, and now it's 16 or something. It's like, maybe I'll start drinking tea, you know, I don't know. I'm just saying that there's options that, yes, it could be, we could see a lot of inflation. Depends on what it is, and maybe we won't in certain products.
So the answer is we
So
don't know
I'm
yet.
battling, right?
No, that's good example. So I'll go to Councilmember Barber and then did anyone over here have a question? Okay.
It's just a general, things to think about, and I think to consider as we're looking going forward is looking at some of the leading manufacturing indices, because if we look at sort of those production indexes, you can see where there's volatility in the supply chain again, after it's just finally hit settled down. And so I can tell you personally exactly how companies managed the supply chain last time was instead of buying something from China or Asia or any of those areas over, we went to Mexico, and because that's where we get the same parts. And now that's not gonna happen, so you're gonna get 2 waves of price increases that are gonna get glommed together, and it's going to be more profound, I think, for the production side.
In Canada. Yeah.
Yeah.
Okay, well, on that happy note, let's
I'm a ray of sunshine these days.
well, you know what, it's good to, it's just, just everybody's personal lives, right? But then, we've got bigger roles in this region and certainly here at the council. And so, you start to just try to internalize this into your brain and think, what's gonna happen. But we will find out in graphs all year long, how it's impacting us, which is great. So,
It'll
I really
keep you
appreciate
posted, right?
Yeah, so I'll give it back to you and we can keep going. Thank you.
Alright, I'll skip forward to the next slide. This is the stock market S&P 500 index, which we are exposed to in our OPEB trust. Currently 64% of our OPEB trust is in the S&P 500 pool at the state board. So we monitor this a little bit. Like I mentioned, the stock market rallied pretty hard right after the election, fueled by expectations of the stuff we all know about that was predicted, tax cuts, deregulation, pro-business policies, things like that. Then in December, the volatility really switched. You can see that on the right side of the graph, that was up and down and up and down. The market began to worry about the trade policies and the inflation, fewer tax cuts coming, or Fed rate cuts coming. So it was pretty volatile the second half of the quarter. It eked out a 2.39% return for the quarter. An interesting fact that's positive for investors is that it was the first back-to-back year of 20% plus returns in the last 25 years. So 2023 it was up 24%, in 2024 it was up 23%. So 2 good years in a row for the stocks. The Mag 7s were over half of the return. Other sectors that were up strong were communication services. If you think Netflix, Netflix, Fox, Meta were some of the big returns. Information technology was, like Nvidia, was up, and financials were also up strong. So that's it for the economy and some of the things that are being seen. And I'll jump into our 3 portfolios. One slide on each that you've seen before. Our short-term portfolio is used for our investing our available cash. It's really structured around our big outflows, payroll, debt service, large capital expenditures. Very short, very conservative. Safety and liquidity are really what it's about. And right now we're very liquid. The left side of the chart shows how it was allocated over time. You can see it was, at the end of the quarter, it was 1.43 billion. 29% in T-bills, 23% in government discount notes, and 48% in a money market fund. So very liquid with the money fund. That's a lot of money that's sitting there, and that's where the best yields have been. So there's been really no incentive to give up any liquidity to invest out longer. If you're not getting a benefit, we're staying very liquid. We are doing some investing just to diversify a little bit, but and we're looking at adding some potentially new money market funds to the mix. But Very short, it's all 5 months and shorter. Not much change, well, I guess there's a little bit of change where we have the money market funds went up during the quarter. Total return was under its benchmark, but very tight to its benchmark, 121 versus 123. You can see the average yield is, in the second bullet there, has been coming down. It's 460 for the quarter versus 504 for the third quarter. Again, that's influenced by the Fed cutting rates starting in September. Interest income's held up pretty well so far and was great for the year. 17.1 million in the fourth quarter. For the year, interest income in this portfolio was 69 million versus 55 last year, so that was a nice increase. Again, that might come down in the future if we get more Fed rate cuts. Just make sure I didn't miss any notes on that one. The long-term portfolio, this is where we invest our longer-term reserves, so it's got a little different investment profile. We invest out a little bit longer and more types of securities. It was 483 million at the end of the quarter, end of the year. 51% in US government agencies, 23% treasuries, 10 in municipal bonds, 5% in our CD program, and 11% in money market. The real change here is the green got bigger, that's the money market balance. And the agencies went down a little bit. That's really because at literally the last day of the year, we had a number of securities mature, so they just flow right into the money fund and they're there until we reinvest it. So it wasn't intentional that we had a bigger money market fund balance, it was just a result of some maturities coming on the last day of the year, so it's reported that way. We did have more activity in this portfolio. I think I've said in past updates that there's really not much activity because of the way the portfolio is structured, but we did have 50-some million of maturities this quarter, which was good because we could reinvest it at some higher yields. So that benefited some of the return. And that's what we want to happen, is some turnover, so it just takes time with this portfolio. But the total returns on the right, we were 0.3% total return versus a benchmark which was negative 121, and I know you probably see that and go, why so much outperformance? But really we're much shorter than our benchmark, and we have been for a long time. And as rates rose, price moves in the opposite direction of interest rates, so longer term securities are more sensitive to those changes than shorter, so us being shorter, we didn't realize as much price loss. So our total return looks much better than the benchmark. The average book yield bumped up a little bit, which was good, and the duration you can see there is quite a bit less than our benchmark. Now we've got a different shaped yield curve, so like I said, we'll have some opportunities to keep investing out a little longer and keep bumping up our yields. And interest income was 2.9 for the quarter, slowly increasing over the year. 10.3 million of income for the year versus 6.2 last year. So it's improving slowly. Last slide, OPEB trust. These are assets set aside to fund our future OPEB liabilities and managed by the state board. We can direct the allocation, but they manage the pools. We continue to be in great shape. The fourth quarter performance wasn't as big as some numbers we've had in the past, but it was up 1.29 for the quarter, 16.6 for the year. You can see our historical averages there are just under 10%. So this continues to be a great portfolio for us. The equity portion, we're invested in 3 pools, as you can see in the 5th bullet there, that The equity portion returned 23% for the year. The fixed income was up 3.65 and the money market was up 5.4. You can see the trust value actually went down for the quarter, even though we had a positive return, but that was because we made an annual withdrawal, which we do every year to pay for our OPEB expenses. So we withdrew 12.5 million to reimburse us for our OPEB expenses, which is what this trust is for, and then that was offset by 5 million of gains for the quarter, so the net, it went down about 7 million. And the last bullet, I guess, is our OPEB liabilities are still fully funded, so we're in great shape there. So that includes my summary. I'm happy to answer any more questions anybody has.
Oh, thank you so much. Are there any questions, comments? Anything at all? Well, thank you for going through all of this with us, and it is nice to take a little extra time where we're not so pressured so that we can ask questions, because it's super important and we appreciate your hard work on this. And again, Councilmember Pacheco is no longer chair of the investment committee. You are now going to be chair of this board, so again, thank you, or this committee. And who's the new chair? Council member?
Well, Madam Chair, Councilmember Morales is the chair.
Morales, okay.
But Councilmember Lee is joining the
Oh,
investment review committee.
okay, awesome. And Councilmember Lee, are you still staying on
Thank you.
audit? Okay.
Thank you for your service.
Okay, yeah, and I just appreciate, we're just, for the public, we're juggling now, coming into March with some different appointments and things like that, so thank you for your presentation today, we really appreciate it. And then again, before we adjourn today, I do want to thank Councilmember Lee for being a wonderful member of this committee, for serving as the vice chair and stepping into this role, for having great questions along the way and helping us all understand the things we need to understand. So thank you, Councilmember Lee, we're gonna miss you. Councilmember Pacheco.
Yeah, Madam Chair, members, I just didn't want to waste his talents. And so I come to the meeting, I didn't understand it all, and I thought, and he has his team there going over it, and so that's why I left the committee, because I think you guys do a great job, and I know Morales was asking some great questions, and he should be on here. And so anyway, but thank you for the time. I did learn a lot, but it took me a while.
Yeah, and you'll still get all of these wonderful
Right.
presentations, so yeah, that's great. Yeah, it takes a while to get the rhythm of the reports and to follow all this information. I will say the staff at the Met Council do a really good job of that. I'll speak for this committee certainly, but any other committee I think that we've all served on, we do appreciate the staff, and your expertise here is hugely appreciated. These are the kinds of things that I don't think the people throughout the region that we're serving really can appreciate, how deep we have to go and how wide we have to manage things, and you're doing a great job, so thanks for all that,
Thank you,
Mark.
Madam Chair.
Yes. All right
Thank you,
then,
everyone.
any other questions or comments? All right then, seeing no other business to come before this body, meeting adjourned. Thank you.